What's up, Money Minds, and welcome back to another video edition of Market Briefs. Today is November 30th, and here's some business and financial news you can finally use. As of November 29th, 2021, Jack Dorsey is out as the CEO of Twitter. And him stepping down is kind of a shock to a lot of the experts in the business and financial world because Jack Dorsey was one of the founders of Twitter. And today it has become one of the largest social media platforms on the planet. But Jack Dorsey is stepping away to prioritize some other things on his list. And Jack Dorsey definitely has his hands in a lot of different things right now. In 2021, Jack Dorsey has made some pretty big headlines. He talked about hyperinflation, and he is one of the biggest supporters of cryptocurrency, and more specifically, Bitcoin. I mean, you have to admit, the hyperinflation thing is kind of crazy. I mean, the United States is not in hyperinflation right now, right? Well, I'm going to break down what Jack Dorsey means by hyperinflation and everything about our inflation situation in the United States. But before we get into all of that, my name is Nate from Minority Mindset News, and if you like this video, then smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world. We can keep making videos just like this one. Inflation has kind of spiraled out of control in the United States over the last 2 years. Inflation is, of course, when our monetary supply is raised to such a level that all of the money in our economy is eventually devalued. This is because the more money you have, the less each dollar will be worth. And that means your buying power ultimately goes down because everything around you starts to cost more. And the United States has faced inflation before, and we've had inflation pretty much since we've had money. The United States had inflation during World War I, World War II, the 60s, 70s, 80s, and even the 2000s. Inflation simply means that your monetary supply is going up. And in a healthy economy, inflation isn't really all that bad. Inflation typically sits at around 2 to 3% every year. That means it goes up by 2 to 3%. So if something costs around $1 today, a year from now, that same item may cost around $1.02 or $1.03. It doesn't really go up all that fast, but lately we have seen some accelerated inflation. The Federal Reserve, who is in charge of our monetary policy and how much money is printed in the United States, prints more money every single year. And like I said, in a growing economy, one argument could be that this is a good thing. The reason being is because as you produce more money and more money flows throughout your economy, more people have access to more money. More people having access to more money means more people can spend money. Businesses grow and incomes eventually go up, which means wages are rising too. If this happens at a small level, then everybody kind of makes more money and businesses can continue to grow. It may not be exponential growth, but it is growth. Growth for businesses means more jobs, more hiring, and more items or products and even locations. So the argument is when inflation is around the 2 to 3% mark, according to the Federal Reserve, this is healthy, then inflation is a good thing. However, inflation in the United States is growing rapidly. In October of 2021, inflation hit a new record high of around 6.2%. That is the highest inflation has been since around 1990. And honestly, that makes a lot of sense. The United States government printed money at a faster rate than it ever has in the history of our government. So in 2020 and in 2021, the United States printed around $3 to $5 trillion in stimulus and has racked up almost $10 trillion in additional debt due to the pandemic. All of this money was printed in order to keep our economy afloat. The gist is, Americans were losing their job because of the pandemic. Social distancing orders and economic lockdowns meant that industries needed to close. And as industries closed, people were out of work. If people are out of work for an extended period of time, and remember back in March of 2020, people didn't know how long things were going to be closed for, that means that nobody is going to get a paycheck. And if nobody is getting a paycheck, then businesses can't grow because people aren't buying anything. Businesses stop making money, then any business that is not closed due to the pandemic is eventually going to close too. So the Federal Reserve decided to step in and provide that economic stimulus and bail out a lot of these industries and people for that matter. People didn't have savings and these businesses didn't have savings either in order to protect themselves from an economic fallout. And an argument can be made that the Federal Reserve and the federal government should have just let all of these people and businesses fail. However, there is a big flaw in this logic. If the United States government would have just put hands off and let a lot of these people fail, then you have millions of people out of work, and you have thousands, if not millions, of businesses that are going to close down. Eventually, some of these businesses are going to become too big, and they will probably need to be bailed out anyway. This is what we saw in 2008 during the Great Recession with the auto industry. These big three automakers like Ford, GM, and Chrysler needed a bailout because they employ hundreds of thousands, if not millions, of people throughout the country and throughout the globe. People suddenly losing their jobs that fast is not good for the economy. So the United States government bailed them out, but even if they didn't bail out big corporations, they still have to worry about people. One of the things that the Federal Reserve did was print stimulus checks. This was thousands of dollars given to the average American for pretty much nothing. Americans could spend it on anything that they wanted to, and this meant that our economy would continue to grow, even if it was artificial. If that money was taken away from people that really needed it, now you have people who are defaulting on their loans and can't afford to make any of their bill payments. So that's hurting businesses too. When people are out of work, they file for unemployment insurance. This is money that is given to you every single week because you are unemployed. And this money is given to you by your state, which ultimately comes from the federal government. And any way you look at it, the Federal Reserve and the federal government is in an extremely tough position. They can't let our economy fail, and either way, they're going to end up paying for it, and ultimately, they get all of their money from taxpayers, so the rest of America pays for that too. And from just a political standpoint, no president and no Federal Reserve chairman wants the economy to fail. Not on their watch. This is bad for a re-election campaign, so they want things to be good right now, and they're willing to do whatever it takes in order to fix them, even if that means inflation gets out of control. So the Federal Reserve printed around $3 to $5 trillion in economic stimulus and also bought trillions of dollars worth of bonds and treasury notes from Wall Street in order to keep the stock market booming as well. Like I said before though, this is way more money than the United States has ever thrown at a problem in order to fix it. In fact, 22% of all of the money that is currently circulating throughout our economy was printed in 2020 and in 2021. So our money supply exploded, and so did inflation. So this brings us back to what Jack Dorsey is saying about hyperinflation. Hyperinflation is essentially when inflation gets way too high and is basically uncontrollable. Hyperinflation basically means that the value of dollars is basically zero or even negative. Nobody throughout the world wants your currency. This is because in order to use it, you have to use an extreme amount of it. I compare this to what happened in post-World War I Germany. People literally had to take wheelbarrows full of cash to their local grocery store in order to buy one loaf of bread. And this is the same reason why the United States can't just print its way out of all of its problems. The United States government has $29 trillion in debt, and it's constantly adding to that. But it can't just print an unlimited supply of money because eventually all of our dollars would become useless. It's kind of like a supply and demand thing. If everyone can get their hands on US dollars and everyone is essentially rich, well, then there's not going to be much demand for US dollars. Supply is going to be very high, but demand is going to be so low, so US dollars are going to be basically worthless. Jack Dorsey believes that hyperinflation is happening in our economy right now because of all of the money that we have printed. However, most economists and experts believe that hyperinflation isn't what's going on right now. We have seen elevated levels of inflation, but our economy and social structures are not collapsing. Things are costing more right now. That is definitely true, but they're not costing so much more that our economy is falling apart. But is hyperinflation something that could happen? Well, it is definitely possible. The Federal Reserve is in charge of watching our monetary policy in the United States and watching what inflation is going to be. So if inflation gets too far out of hand, the Federal Reserve will make some policies that help bring inflation down. These policies could bring inflation down, but also crash our economy depending on how fast and what the policies are. But if the federal government and the Federal Reserve continue to pump even more money into our economy, then hyperinflation could happen eventually. Right now, though, we are definitely not near a period of hyperinflation. Like I said, inflation was at around 6.2% in October of 2021. However, the United States government has seen periods where inflation was at around 13%. This is what we saw back in the 70s and 80s. That's more than double where we're at right now. And our federal government and the Federal Reserve believes that our inflation is mainly due to supply chain issues. Our supply chain got disrupted last year, and now we're facing a labor shortage to couple that. Nothing can get delivered to you, which again means supply and demand. There is a demand for just about everything, but low supply of everything. And we're making steps to change that. But Jack Dorsey believes that there is already a major solution out of our inflation issues. Jack Dorsey believes in cryptocurrencies. Cryptocurrency has exploded over the last year or two. At the beginning of 2020, one Bitcoin would cost you around 7,000 US dollars. As of recording this video, one Bitcoin is valued at around 60,000 US dollars. That is a major increase. And we've seen the rise of some other coins like Ether, Dogecoin, and now Shiba Inu. But cryptocurrency offers more than just an alternative to traditional currencies. It is a natural hedge against inflation. In the business and financial world, hedging means that you're protecting yourself with an asset. So when we see stock market crashes, investors like to put their money into something that is going to continue to gain value, even though the markets might be losing. So for instance, when the stock market crash of 2020 happened, we saw the price of gold continue to rise. This is because gold is a universal asset. The price of a pound or ounce of gold is going to be the exact same no matter where you go in the world. It has value, and it has inherent value because gold takes time, money, and energy in order to produce. And the same can be said for Bitcoin and other cryptocurrencies. This is why Bitcoin is often referred to as digital gold. In order to create one coin of cryptocurrency, you have to mine it. Mining involves running a program on your computer constantly until a certain hash is found. This hash is essentially a code, and it is a code that is recorded on a blockchain to give you one unique token. That code can only be recorded once, so once you have a Bitcoin, it cannot be replicated. So it takes time and energy to actually mine a coin. In addition, Bitcoin and other cryptocurrencies have a limit. There can only be 21 million Bitcoins in the entire world. That means you can only create so many of them, and once you reach that limit, no more can be created. That means you are naturally protected against inflation. This completely differs from our traditional money because the federal government and the Federal Reserve can decide that they need more money and they can print as much as they want. And the money's not really backed by anything. The only reason that it has value is because the United States government says it has value, and we believe it has value as a currency. But if people stop believing that the US dollar has value, well, then it's going to start becoming harder to use it. Cryptocurrency essentially solves this problem, and Jack Dorsey is way in. His company, not Twitter, Square, actually purchased around 9,000 Bitcoins back in February of 2021. At the time, 9,000 Bitcoins would be worth around $400 million. Today, though, that same amount of Bitcoin will be worth around $511 million. But what I think is most interesting about Jack Dorsey being all about Bitcoin right now is because he is also the CEO of Square, which controls Cash App. These are payment processing platforms. They directly work with money and payments every single day. And now they're going to start incorporating cryptos into their services. Once they fully incorporate cryptos like Bitcoin and Ethereum into their platforms, that means the price of Bitcoin and Ether is going to go up. This is because it's a lot more accessible and a lot easier to use these cryptocurrencies. This is one of the biggest problems with crypto right now, is it's just hard to use because a lot of companies and countries are not adopting them. Some countries like El Salvador are all in. However, the United States is not there yet. So Jack Dorsey may have a little more vested interest in how cryptocurrencies do, considering he wants his app to be the wave of the future. If Square and Cash App become the #1 place to use your cryptocurrency, well, that is good for Jack Dorsey. It is a big bet for sure. And as he leaves Twitter, he now has more time to focus on cryptocurrency and Square and Cash App. And if Bitcoin and other cryptos continue to boom in price, his businesses are going to boom too. However, this could also be catastrophic for Jack Dorsey if cryptocurrencies don't pan out as the currency of the future. Nobody really knows what direction things are going to go into, and especially as the United States government and other world governments start to look at cryptos, you're going to see a lot more regulation. Regulation in the cryptocurrency industry is very light right now. However, as this continues, this could essentially defeat the purpose of cryptos. A lot of people like cryptocurrency because it is decentralized. The rules are created and it is governed by the people. It is the currency for the people. However, if the United States government decides exactly what you can do, how much you can trade, and how much you can hold of Bitcoin and other cryptocurrencies, that would kind of defeat the purpose. Anybody in the world can create a cryptocurrency. So who's to say another crypto won't come up and beat Bitcoin as the world's dominant crypto? Right now, there are over 10,000 cryptocurrencies in the world. This could double or even triple within the next decade or so. So how do you know what to trust? How do you even know what to use? The industry is still trying to figure out a lot of these kinks, but the bottom line is Bitcoin right now and other cryptos are exploding, and Jack Dorsey is all in. We're starting to see some other big figures like Elon Musk and Mark Cuban get in on cryptocurrency as well. Nobody really knows what the future holds, but right now, there are definitely some major bets going on. As for inflation, nobody really knows what's going to happen with that either. Essentially, the Federal Reserve has come out and said that our supply chain issues are causing all of this inflation, but in 2022, those could completely disappear and inflation will go away. However, inflation is really when you up our monetary supply, and we know we've printed so much money over the last year. That money is not going away, so inflation probably won't go away either. Most experts believe, though, that inflation will drop down to what the Federal Reserve believes is a healthy level, which is around 2 to 3%. But this all depends on our economy, how it recovers, and the COVID-19 pandemic. And like we've seen over the last year, anything can happen at any point. And it looks like there's an awful lot of betting from both sides. But now I want to hear from you on this issue. Which side are you on here? Will cryptocurrency become the dominant currency of the future and protect us against inflation? Or is all of this inflation just temporary and transitory like the Federal Reserve says, and eventually the US dollar will overtake the rest of the world and continue to be the world's currency? Whatever your thoughts are, leave a comment below before you go. But that is it for today's Market Briefs video breakdown. Thank you so much for watching. If you like this video, make sure to hit that subscribe button below. Keep hustling, money minds, and I'll see you all in the next one.